Yeah, hello and welcome to another update video about XRP. We start zoomed out. What you can see here on the chart is this movement of the January lows. We had a three-wave move to the upside that we count as overall. Here we count this move of June last year as a WXY structure. And the Y wave started basically in January. And all of that together forms a three-wave move, basically an A wave. The idea was we are coming down in a B wave, and we could then move up in a C wave. The main question we're dealing with at the moment on this chart is, has this B wave completed? And I can tell you it's technically possible it has, which would be here, okay? And it could have completed middle of August, and we might have started already the move up in a C wave. It's just not very evident yet, okay? It's just not very evident. However, the short-term trend is up. So I suggest we focus on higher short-term while being mindful that we could still get a push to the downside. So if we assume the B wave is already in, then we would have started already the C wave to the upside. Yeah, and that would have to be a diagonal structure. It just would have to be a diagonal. So in that scenario, it would work as follows. This move up would have been a wave 1. The move up in August all the way to around about 56 cents. The move down would have been a wave 2 all the way to the 11th of October. That's basically the bullish wave count, yeah. The move up now would be a wave 3. Then we would get a wave 4 and a 5, which means if after the next significant high, if we're forming a higher low and a higher high, we can argue that a low has been made. And then we're watching for the three-wave pullback. And then this would count as a 1-2 setup. And we would get a third wave to the upside. Then we would get a wave 4 and a wave 5. And that would complete this C wave, which is a 5-wave move. Okay? So that's basically what we're watching for in a bullish scenario. To keep this bullish scenario alive, the following needs to happen. First of all, we must not at all break below the invalidation point of this scenario, which is basically here the 45.8 cent level, the October low. If price breaks below that level, it will be invalidated. So on the shorter time frame, we're going to talk about the micro support levels, okay? Now, what happens if the B wave is still unfolding? Well, it's possible. Then we would be dealing here off this high, which was made in July. We would be dealing with a so-called W, X, Y structure in wave B. And then we would start the move to the upside. So on this time frame, this offers pretty poor quality or poor probabilities because the move up is not impulsive. The move down is still possible. Therefore, we can only track the micro support levels, understand what is the shorter time frame trend, which is currently up, and just trade the trend if we want to trade it. At the moment, certainly let's say the bigger picture outlook or medium-term outlook is a little uncertain until we see a first impulse. But short-term, the trend is clearly up, so we're going to zoom in a minute. But that would indicate that short-term, we can push a little higher and would then come down, make another low. That low could, for example, hit this trend line here, but ideally would stay above the January low, which was at 30 cents. So that should give you the key scenarios, which means that if we now continue to form higher highs, higher lows, we are already in the C wave. For now, however, as long as certain support levels are holding, the trend is up, okay? And below these levels, it might be wise to stop out. I mean, that's essentially up to you how you manage that. We can only provide the analysis, and the analysis shows us that we are even in the bearish scenario, which would allow for another low then, yeah? Even in the bearish scenario, we can focus on higher short term. So if we look at this as a WXY structure, yeah, in this larger X wave that we just talked about, then in the Y wave, we're dealing with an A, B, C structure. That's precisely what we talked about in the last video. A wave, the B wave might already be in, and the C wave to the upside is basically unfolding now. So therefore, we did say in the short term, as long as this B wave low is holding at 53.3 cents, the focus can be on higher short term. We have here a potential 1-2-1-2 setup with a third wave currently in the making. And as long as this, and that's really nano support, you could say, this swing low is holding at 54.9 cents, the focus can be on higher short term, but or very short term. But if that level breaks, then we have to be ready that this is going to break down and we come down in the Y wave. At least there would be an early indication, right? It would not be invalidation of further upside, but it would be an early indication that this microstructure is certainly not playing out. I'm not confident about it as well. I have to say that I'm not confident about this micro count. It's just something that is probably the best we have at the moment in a scenario in which an uptrend is potentially playing out here short term. So you can see that the assumption would be that this C wave here, C wave of Y, that this is unfolding as an impulse. So we have a 1-2, 1-2 setup already. Wave 3 might have finished, so we might now be working on this fourth wave here. Then there should be a fifth of 3, another 4, and another 5. Now, not too confident about this count because this second wave 1 is a bit too long. But it's a valid count, okay? And if we now watch for direct continuation here, typically we would say that such a wave 4 should not break below the 50% retracement level. So what we're talking about here is the support all the way down to 56.6 cents. This is just not an invalidation point. It's just structural support, Fibonacci support. So if the price breaks below that level, here the 50% Fib level, it would indicate that something is wrong here, you know, something doesn't really go according to plan, because as per this wave count, ideally, the price would continue higher before breaking below 56.6 cents. Push higher in a fifth wave of 3, you know. And overall, I think the 63-cent level is a key level to watch. It is also here this previous structural resistance area. And yeah, I think this is currently what we're dealing with here. Yeah. So short-term upside possible against the levels indicated. There are several layers of levels, support, Fibonacci support, and then invalidation points. And yeah, however, really to confirm the break to the downside here in wave Y, we need to get a break below that X wave low. I mean, that's the confirmation level that we are coming down in this larger Y wave, okay, that I indicated in the beginning in the bearish scenario. That's my update about XRP. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.